Yo, what's up everybody? It's Brilliant It, and let's talk cars. Specifically, how to pay for them. Because let's be real, nobody's walking into a dealership and dropping a briefcase full of cash anymore. When you're in the market for a new ride, you're usually looking at two main options: buying with a loan or leasing. Both of them have their own set of pros and cons. And honestly, it can get super confusing trying to figure out which one is going to be easier on your wallet in the long run. But don't worry, that's what I'm here for. In this video, we're gonna dive deep, break down the numbers, and see which option comes out on top. Buying with a car loan or leasing. Let's get into it.
Okay, so let's start with car loans, the classic way to buy a car. Basically, a car loan is like borrowing money from a bank or a credit union to buy your car, and then you pay that money back with interest over a set period of time. This is usually something like 3, 5, or even 7 years, depending on the loan terms you get. One of the biggest advantages of buying a car with a loan is that once you make that last payment, the car is all yours. You own it free and clear. No more monthly payments, no more worrying about mileage limits or wear and tear, it's all yours. This also means you can sell the car whenever you want, customize it however you want, or even drive it into the ground if that's your thing. No judgment here. So to sum it up, car loans are a great way to finance a car if you're looking for that long-term ownership and the freedom that comes with it.
Now, let's move on to leasing, which has become increasingly popular in recent years, probably because it seems like the cheaper option. But is it really? Well, in a way it kind of is, but also not really. See, leasing is more like renting a car long-term than actually buying it. You're basically paying for the right to use the car for a fixed period, typically between 2 to 4 years, and then at the end of that lease term, you hand the keys back to the dealership. Now here's the thing. Because you're only paying for a portion of the car's value, your monthly payments will generally be lower compared to a car loan. This can be a huge draw for people who are on a tight budget or just prefer to have lower monthly expenses. Plus, you get to drive a brand new car every few years, which is a major perk for some people. But, and this is a big but, there are some downsides to leasing that you really need to be aware of. First off, you never actually own the car. You're essentially renting it for a few years, and at the end of the lease, you have nothing to show for it except maybe some fond memories and a few parking tickets. Second, leases come with mileage limits.
Chapter 3, Car Loan versus Leasing, breaking down the costs. Okay, so we've covered the basics of car loans and leasing, but now let's get down to the nitty-gritty. Which option is going to save you more money in the long run? Well, as with most things in personal finance, the answer is it depends. Leasing can seem like the more affordable option up front because of those lower monthly payments. And if you're someone who always wants to be behind the wheel of the latest and greatest car, leasing might be a good fit for you. But it's important to remember that you're essentially renting the car, and at the end of the lease, you're back to square one, having to get another lease or finance a new car all over again. Buying a car with a loan, on the other hand, is a long-term investment. Yes, your monthly payments might be higher initially, but once you pay off that loan, you own the car outright. That means no more car payments, which can free up a significant chunk of change in your monthly budget. Plus, you have the freedom to sell the car whenever you want, which can help offset the cost of your next car purchase. Now let's talk about depreciation. Cars are notorious for losing value over time, and this is something to consider when comparing leasing versus buying. When you lease a car, you're essentially paying for the depreciation that occurs during the lease term. When you buy a car, you absorb the entire depreciation hit, but you also benefit from any remaining value when you decide to sell or trade in the car down the line.
Chapter 4. The final verdict. It all comes down to this. Alright, so we've covered a lot of ground here, and I know it can seem overwhelming, but at the end of the day, the decision of whether to lease or buy a car is a personal one. There's no right or wrong answer. It all comes down to what makes the most sense for your individual needs and financial situation. Now, if you're looking for my personal opinion, here it is. I'm all about building wealth and saving money long term, and for me, that means buying a car with a loan and keeping it for as long as possible. I'd rather drive a car that's a few years old, paid off in full, and know that I'm not throwing money away on depreciation every few years. Alright guys, That's it for today's video on car loans versus leasing. I hope this helped clear up any confusion you might have had and gave you the tools to make an informed decision. Remember, it all comes down to what makes the most financial sense for your unique situation. There's no one-size-fits-all answer here. If you're still on the fence, I highly recommend checking out the resources I've linked up in the description below. And hey, if you found this video helpful, don't forget to give it a thumbs up and subscribe to the channel for more personal finance tips and tricks. Thanks for watching, and I'll catch you in the next one. Peace.